Hey traders, I just want to talk to you about gold on the daily time frame. I know we took it long last week based on this bullish pin bar reversal on the daily time frame representing a higher low at the 0.618 Fibonacci retracement from Christmas 2017, and we did have a good movement to the upside and we were able to make some good floating profit. However, gold has shown a reversal point at a very significant level here. And when we look at gold on the shorter term cyclicity, you can see here that we've got lower highs and lower lows. Now, Friday's bearish pin bar reversal, rejecting not just this horizontal level of support now behaving as resistance, is also rejecting $1,300 and is also rejecting this Fibonacci retracement as well. Suffice to say, this is a 0.618 Fibonacci retracement, which is significant, and it hasn't broken out of this downward trend, making lower highs and lower lows. Suffice to say, we, in our long position, are moving our stop loss below the low of Friday, because if it breaks Friday's low, then we can reasonably say that we've got continuation of this downward move. Okay, so we've always said that, hey, when it comes to moving your stop loss, move your stop loss to a position where if price does reach or trigger that stop loss, then the setup is invalid. And I think it's fair to say that if, as and when price does come and take up the low of Friday's low, then we can reasonably say that there's going to be movement to the downside. And that doesn't mean that we cannot make money from this, by the way. Far from it. It means that if we are placing our stop loss to protect our profits from our long trade taken last week, up to this point here, we've made probably about just shy of 2%, risky 2% that is. I'll say just shy of that actually. In terms of making money on the downward fall, if it does move down, remember we're only triggered into the trade if it takes out the low of Friday. We're trading this one as a standard entry, bearish pin bar reversal. So our entry for a sell would be just below Friday's low, stop loss above Friday's high, and the first target will be just in this zone here. Okay, so it's got decent 2-to-1 reward to risk trade. Remember, we are still bullish on gold long term. We are still making key higher lows here, and we are just bashing our head against this horizontal level here at 1357, and it's going to give at some point. But for now, we are looking at taking advantage of the short-term cyclicity, just like we did on the way up when we were trading it back in 2017 in December. We're trading all the way up on the daily, and then we had the retracement. We bought here, then we sold here, then we bought here, and that means that we can just take advantage of gold whether it goes up or goes down. And whilst we're long at the moment, we will be moving our stop loss at a point where if it does trigger our stop loss and the long setup is invalid, at least we'll be making money if, as and when price goes down. Okay, but for now, looking at the weekly time frame, we are pretty biased of gold. Happy trading, folks.